Hey there, what is going on with this housing market? Is it starting to cool? Are we in for more home buyer bidding wars and seller windfalls? Let's see if we can figure this out. Welcome to the Real Estate Market Update for June 2021. I'm Erik Braceland with Braceland Homes here in sunny San Diego, California, where we guarantee the sale and or purchase of your home, or we'll buy that home ourselves. Please consider subscribing to our channel if you like this video so you can be notified of future content as I produce it. There's a lot going on right now in real estate, and my goal over the next few minutes is to give you all the things that are happening so that you're educated on the hottest topics in the real estate market. So with that, we'll go ahead and get started. I will share this first slide that comes from Ivy Zelman from the Z Report. It says, this month, our broker contacts report a continuation of robust demand and intense competition from buyers to win houses, with bidding wars, all-cash offers, waived contingencies, and rent-free leasebacks increasingly common in many markets. With so much happening across the country in real estate right now, we know the biggest story certainly is the lack of available inventory causing the current state of affairs. Why is this happening? I want to give you a couple of visuals to use in communicating that really underscore why this is happening. First reason is we don't have the sellers that we need in the market today. This graphic here from the National Association of Realtors shows seller traffic. Think about those that are putting their homes in the market. And in this gray, the darker gray, is the very weak seller traffic, moving to blue and then dark blue only in West Virginia. But the majority of the country, weak to very weak seller traffic. Now we cross over to the middle of the year. We've talked about how experts are saying some more inventory should come back to market. And that's a big question mark. We're waiting to see. Now let's contrast that visually with buyer demand or buyer traffic. And what do you see? We have very strong to strong buyer traffic across the country. So very weak seller traffic, very strong buyer traffic, and this is something that you already know. But this really underscores the reality across the country, no matter where you are, that largely we're seeing less sellers, more buyers in every area of the country. You know, many have called it a wild, wild west environment. Buyers are doing anything they can to stand out, and more all cash offers do just that. And that can be the difference between getting that dream home or winding up empty-handed again. And let's talk about this, the buyer fatigue. Home buyers are frustrated right now because they can't find a home or have been outbid or whatever the case may be. Their offer may have been declined because of an all-cash offer. We know there's a lot of that happening, and I'm going to get into a little more of this in just a few minutes and hopefully offer some hope to those of you staying in the hunt. If we look at inventory, we know across the country we're in this situation because inventory has been depleted as we went through last year. And we saw this low in December and January of this past year, to where now in April, which is the most recent number reported by the National Association of Realtors, we have 2.4 months of average inventory, which is available. And we want to see that number continue to rise, and we'll talk about that. I just want to be clear that we're in this situation because of the lack of inventory caused by the lack of new home construction. That is what has put us in the situation we're in right now. If you'll allow me to digress for just a moment, I'd like to ask you to please subscribe to our channel and hit the bell icon so you can be notified of future updates and other related content. Let me know if you're enjoying these insights and hit that like button. Any questions on this? Just enter them into the comment section, which is down there below the viewing window. All right, let's get back to our update. What does all this mean? What does it mean for those that are buying? The price is going up. We have more folks buying homes than selling homes, and we know prices are going up. Let's look at what the forecasters are projecting. Something I found interesting is that all these entities have upped their forecast as the year has gone on. Here we are in June, and we started out in January. It's come up several points since then. The average right now, 8.2% appreciation predicted by forecasters in the 2021 real estate market. We know demand is there, and we're wondering, is supply coming back? We've talked about that, but that will be the ultimate determiner of price as we go forward. But what you see experts clearly saying here is we're going to have a strong price appreciation this year as we go throughout. And that's not just here in San Diego. It's Los Angeles, San Francisco, Denver, Phoenix, Seattle, Cleveland, Dallas, Miami, Atlanta, New York, and Boston. Price appreciation across the country. If we look at the map and price appreciation by region, we can see strong appreciation across the country. On average, 12.6% appreciation year over year in quarter 1 of this year. Now, what stands out to you is the mountain areas where we see over 15% appreciation. That's an area that we want to take a look at. Some areas there that are seeing strong appreciation year over year call into question the sustainability. Are we getting a little too hot here in the price growth in homes across the country? So it's something we'll want to continue to watch and see what the experts are saying. Bill McBride says this, and I think it articulates well the inventory issue. If inventory increases slowly, house prices will continue to rise rapidly, and if inventory rises sharply, house price growth will slow. So here's the question I would ask you. What do you see happening in your area? We know on average across the country we're seeing less sellers. We're seeing more buyers. But what are you seeing relative to inventory growth? Do you see it growing slowly? Do you see it growing rapidly? Now, the question of inventory is the big question. We talked about it last month in the real estate market update. We talked about as we cross over into the second half, we're going to see more inventory come to the market. And that will come from a number of different areas. Those that didn't sell in the last year and feel safer now. We know those people are coming back to market. Those that have been affected by the pandemic. And then third are builders. And the builder category is certainly where we're seeing headwinds of rising costs. You can't turn on the TV without hearing about rising costs of lumber in today's market. Certainly it's dominating what we see in our business, and that's caused a slowdown in some of the leading indicators in building. I'm going to go to a quick quote from the National Association of Home Builders from Robert Dietz. He says, "The decline in single-family permits indicates that builders are slowing construction activity as costs rise. While housing starts were strong at the beginning of the year due to the home builder constructing homes that were pre-sold construction, higher costs and limited availability of building materials have now paused some projects." So that inventory we saw coming and experts saw coming from builders in the second half, there's a question mark there. What is going to happen with the rising supply costs? Now, as economists talk about this, what I hear them saying are a couple of things. One is it's an issue affecting builders right now. Second, their forecast for this is an issue that we will work through once the supply and demand imbalance is worked through. Now, the question out there is, how long will that last? And you see here, we're starting to see in the leading indicator that builders are saying, okay, we're going to slow down, we're going to pause. Whatever the case may be in new construction. So a lot of people talking, and I've spoken about it, is this a bubble? And this is just continued here from Morgan Stanley. We have strong conviction that we're not experiencing a bubble in U.S. housing. We're not suggesting that the home price appreciation will maintain its current torrid pace and home prices will continue to rise, but more gradually. So you think back to that map that we looked at of pricing in the red area and the mountain area. That's the torrid pace. The rise in prices across the country. Morgan Stanley is saying here, we don't see this as a bubble. We also do not see this as sustainable. Something to keep in mind. All the rise in price causes more and more people to say, okay, are homes even affordable? So I want to spend just a minute and talk about housing affordability. As we always talk about this, we want to balance the reality of affordable housing versus housing affordability. Two different conversations. Affordable housing oftentimes references the number of homes on the lower end of the market that are available for purchase. Housing affordability refers to how strong and how powerful the dollar is relative to what someone can buy. So it's clearly more affordable to buy a home than it is to rent over time. We know all the benefits of home ownership. We've talked about that. June is National Home Ownership Month. I'm going to talk about that just in a minute. And what's happening with the price of rent? It continues to go up. This is a look going all the way back to 1990, and rent continues to go up. Renters do not see that benefit that homeowners do. Whether through the power of refinance, whether it be through all the intangible or non-financial benefits of home ownership that we know. Michael Laughlin said this, and I felt it was very important relative to renting. We need to stop seeing housing as a reward for financial success and instead see it as a critical tool that can facilitate financial success. Affordable home ownership is not a capstone of economic being. It is the cornerstone. And many of us certainly we know across the country stories of folks that have used equity in their homes. They've used that appreciation in their homes to start a business, to send a child to college, whatever the case may be, and using their home successfully to do that. Let's look at what the top financial institutions are saying about housing right now. These are institutions that manage more in wealth than anybody else in the country. and we want to look at what they're saying right now about the housing market. What are they telling their best clients? We'll start here with JP Morgan. Home buyers. Interest rates are still historically low. As of last week, 2.99% on the average 30-year fixed, though they're inching up. Housing prices have spiked during the last 6 to 9 months, but we don't expect them to fall soon, and we believe they are more likely to keep rising. Certainly what we've seen from forecasters. And if you're looking to purchase a new home, conditions may be better than 12 months hence. Those who remember the housing bubble of 2006 and 2007 may be nervous watching U.S. housing prices soar, but the previous bubble was fueled by speculative buying, which we do not think is the case today. We know lending standards are different in our business, and we know that speculative buying is not out there. We know that people are making decisions that they want something different for themselves, for their family, coming out of last year. That's what JP Morgan is saying in their analysis of U.S. housing. Let's go to Merrill Lynch. There are several reasons to believe that this is likely to be an unusually long and strong housing expansion. Demand is very strong because the biggest demographic cohort in history is moving through the household formation and peak home buying stages of its life cycle. Pause there. They're talking about millennials. They're moving through and wanting to buy homes. They go on to say coronavirus related preference changes have also sharply boosted home buying demand. And at the same time, supply is unusually tight with available homes for sale at record low levels. Double-digit price gains are rationing the supply. That's certainly true here in San Diego as well as many other markets throughout the country. That's what Merrill Lynch is telling their clients right now. I want to go to another, Goldman Sachs. Strong demand for housing looks sustainable. Even before the pandemic, demographic tailwinds and historically low mortgage rates had pushed demand to high levels. Consumer surveys indicate that household buying intentions are now the highest in 20 years. I'm going to come back in just a minute to the household buying intentions they're saying. People want to buy homes. They go on to say, as a result, the model projects double-digit price gains both this year and next. So if you're in the hunt right now, if you're looking for a home, stay in the hunt. Look at what some of the top wealth managers across the country are saying about housing. Last one I'll use here, Morgan Stanley. Unlike 15 years ago, the euphoria in today's home prices comes down to the simple logic of supply and demand. And we at Morgan Stanley conclude that this time the sector is on a sustainably sturdy foundation. This robust demand and highly challenged supply, along with the tight mortgage lending standards, may continue to bode well for home prices. Higher interest rates and post-pandemic moves could likely slow the pace of appreciation, but the upward trajectory remains very much on course. So across the board, we see that these wealth managers and their institutions saying, certainly in housing, we expect this to continue into the coming year. We expect prices to continue to grow. If you're thinking about buying, do it now. And we don't see the speculative buying that we saw back in 2006. So this should offer some encouragement to those of you in the game that are suffering some fatigue, some setbacks, some uncertainty in acquiring a new home. You may be asking if you're doing the right thing by pressing on. The experts seem to agree that sooner is better than later at this moment to buy a home. So don't wait. Keep at it. The Gallup survey has come out recently, and America's choice of the best long-term investment is real estate. You know the survey has been going on for quite a while, and this 41% far outproducing stocks in Gallup's poll. The 41% choosing real estate is the highest selecting of any of the 5 investment options in the 11 years past that Gallup's asked this question. So important to remember. Remember that graphically you can just see how high that is with America's choice for the best long-term investment being real estate, going all the way back to 2011. Now I want to mention something about this that is happening right now in real estate. You know, coming out of the last downturn in 2008, 2009, we saw folks kind of say, is home buying what we want to do? And whereas we sit today, people saying, you know what? The demand, the folks that want to buy a home, like we just talked about, is at an all-time high. 2 very, very different scenarios. You know, one being a pandemic, one being a housing crash. Both were crises, but coming out of this crisis, we're seeing a very, very different opinion, approach, and desire towards real estate. So for this real estate market update for June, and for everyone here at Braceland Homes, grateful for the time you invested in watching this, grateful for the time that you spend to be aware of what's happening in this market. If you enjoyed this content or found it helpful, please hit that like button, consider subscribing to our channel, and share this content with someone you like. If you didn't like this video, share it with someone you don't like. I do appreciate your comments, questions, and feedback, so please enter those below so I can address them and other viewers can benefit from your input. Take care.